Hello and welcome back to Swing Trading Masterclass by Wealth Education. In this video, we're going to take a look at 3 white soldiers and 3 black crows patterns. This is a 3 candlestick pattern, as I'm sure you can imagine, and it harkens back to the old black and white charts. So you'd have 3 white or positive candlesticks along with 3 negative candlesticks for the black crows. Those would be white soldiers, those would be black crows. Now, in the purest sense, this is how they look. You get a positive candlestick, and then the next day, and it is a daily candlestick thing, you gap lower, and then you rally, and then you do it again a second day in a row after this candlestick. So you gap lower and then you rally. It just shows real persistence with the 3 white soldiers. Now you call it green soldiers with green and red crows, whatever, but that's what it is. It's just simply the market rallies. We gap lower, we blow through that, we gap lower, blow through that. Now with the black crows, it's the exact opposite. It's just negativity. Now, the biggest problem that you have is you don't see this on cryptocurrency or Forex markets because they don't really close, and they certainly don't close enough that you would have that. They don't close on a daily basis. On Forex, you might get one, like on Monday in Asia, opening up, but after that, it's not like we close at the end of the day Monday and then we open up again on Tuesday. So we have to use a little artistic license there. However, it is worth noting that there is a 3 black crows here. We had the negative candlestick. We gapped slightly, pulled into this one, and then close out negative. We gapped lower, pulled into this one, and close out negative. It's a very negative sign because it shows sellers coming in again and again. Now, you can trade this a couple of different ways. You can either put the stop loss behind it, or some people will just do it with the second candlestick. Either way, you're fine. You risk a little less. Now, in this particular case, these are pretty small candlesticks, so you don't have to worry too much about it. But on a bigger, more spread out example, you may choose to put your stop loss behind the second candlestick. Now, again, in Forex, you kind of have to fudge it a little bit. You've got a nice green candlestick here. We pulled back in this hourly candlestick and rallied here in the euro. We pulled back and we rallied again. There's your 3 white soldiers. You could have put your stop loss either underneath the beginning one or underneath the second one. Again, in this case, probably not a big difference one way or the other. You're looking at about a 15 pip difference because it is euro hourly. But you can see we took off quite nicely from there. And if you think about it, it makes sense. You've got 3 candlesticks in a row where the buyers are really kind of pressing the issue. So here in Bitcoin, kind of the same thing. We got this. Got a little stubby one here, but that one did gap lower and we shot higher. In this case, you could have put the stop loss down here or here. Probably here would have made more sense because we made a bigger move there. That way you don't have to risk as much. And then you can see that the market did, in fact, rally quite significantly on this hourly chart for Bitcoin.